This is the total market cap of all the cryptocurrencies, and it ran up to $3 trillion for the first time earlier today. The green line, the next level of green line, is not too far above. At least it doesn't look too far above on the price. But when we zoom in, it's actually at 3.7 trillion. So it's about 20 to 25% above where we are right now. What stands out to me right now is this is a three-wave move higher. So if this is a three-wave move higher, then there's two things that could happen. First of all, this could morph into a five-wave move. So that's one possibility. And another possibility is because that's a three-wave move, that prices could end up correcting lower in another three-wave move. Well, the high that we saw in the summer of 2021 did take us up to that 1618 mark. And then we got a little bit of a correction, and then we're getting ready to rally higher. At least that's what this model would suggest. Hi there, and welcome to this video where we are going to analyze Bitcoin, the largest cryptocurrency out there. And want to start off with and take a look at the total crypto market first. Here, this is the total market cap of all the cryptocurrencies, and it ran up to $3 trillion for the first time earlier today. Now, the first time that all of cryptocurrencies reached 1 trillion was in January of 2021, so 10 months ago. It took, if you count by the time Bitcoin was born on January the 1st, 2009, from 2009 till 2021, basically it took 12 years for the crypto market to reach its first $1 trillion mark. After it reached its first trillion, then it went to its second trillion, to 2 trillion total, 4 months later. And here we are sitting at the third trillion 10 months later after the first trillion was reached, or 11 months actually. So here we are in November, and $3 trillion market cap. So when we take a look at the waves of the market cap now, Elliott Wave Theory, which we're going to talk about with regards to the analysis on Bitcoin in just a minute. Elliott Wave Theory can be used on a variety of markets and even the total valuation of the market cap. So you can use technical analysis and determine where support and resistance lies. Here, since the pandemic low of 2020, prices have been holding through this uptrend, and as long as prices are holding above this support level, then we can expect that this cryptocurrency market is within a larger bull market. And the support line is rolling through here at about 2.25, 2.33 trillion. So not too far below where we are at this point. I'm going to add another set of lines to the chart. This one is a Fibonacci channel. Basically what the Fibonacci channel does is you draw this baseline, which would be this gray line at the bottom, the support line, and all the other parallels are parallel to that baseline, and they are equidistant or a Fibonacci distance away from that baseline. And what I want to highlight here is how prices have been respecting this green line on several occasions back in 2017, 2018, respected it again here in the summer of 2021. It's even been bouncing below the green, or in between the green lines. Okay, as soon as it popped up above the green line here, it came back, found support, and has bounced up. So the green line, the next level of green line, is not too far above. At least it doesn't look too far above on the price. But when we zoom in, it's actually at 3.7 trillion. So it's about 20 to 25% above where we are right now. So basically what that tells me is that the cryptocurrency market could rally 20, 25%, reach this green line. From there, it doesn't have to stop, but that green line could be an area where the crypto market might find a little bit of resistance. It could continue to rally. The gray line, the top gray line, is up near 21 trillion. So whether we're fussing over 3 trillion, 4 trillion right now, years from now, a year from now, several years from now, the total valuation of the cryptocurrency market is going to be multiples above where it is right now. So we're going to see the total value of this well exceed 4 trillion, probably even well exceed the 20 trillion, and eventually maybe get up into that 100 trillion mark years down the road. So here we are sitting at 3 trillion, talking about 4 trillion. That's really nothing in the whole scheme of things. We're still early into this wave. There's still a lot of cool new projects that are going to be created that are going to make their way out to the market. So let's move on over to Bitcoin. All right, so with Bitcoin, what I want to do is I want to start off with kind of a naked chart and share with you what really the possibilities are. There's, when I think of analyzing and when I think of the possibilities with the Bitcoin chart, it reminds me of the game of chess. Okay, within chess, now I know a little bit about how to play, but I am not an expert chess player by any stretch of the imagination. But I've heard there's like 30 different ways you can start the game of chess. But there's really only about 3 or 4 that you actually want to use. So the other 25 to 30 ways to start the game of chess are really not that good. And so that reminds me of Bitcoin, and that there's a lot of different things that the Bitcoin market could do. But when I look at this from an Elliott Wave perspective, there's a couple of models that really stand out to me that really describe the price action for Bitcoin. Now, these models do a couple of different things. And so depending on the path that Bitcoin ends up taking, we can then focus in on the model that reflects that path. Now, Elliott Wave Theory is a series of 5 waves and 3 waves. So the market advances or moves in the direction of the trend in 5 waves and runs counter trend in 3 waves. And so what stands out to me right now when I look at this naked chart is that, let me change the color of this. What stands out to me right now is this is a 3-wave move higher. So if this is a 3-wave move higher, then there's 2 things that could happen. First of all, this could morph into a 5-wave move. So that's one possibility. And another possibility is because that's a 3-wave move, that prices could end up correcting lower in another 3-wave move. Let me change the color of that. Okay, so really here's the 2 models that we're looking at that will continue to extend higher until we see 5 waves to the upside, or that we are near the end of a 3-wave move, and at the end of a 3-wave move means that we're going to get some type of deep correction, a deep correction that can take us back into the mid-30s. So, based on these 2 models, which one do I think is going to happen? Well, I'm leaning towards the black one. There is a possibility that Bitcoin could continue to move higher. And at the end of this video, I've got another chart that has nothing to do with Elliott Wave that I want to share with you that also helps support that we may be looking at higher prices for Bitcoin. But I'm leaning towards the black one. But we're going to keep an eye out in case prices do fail. And if prices do fall apart, then that could explain, or the gray one, the gray model could explain. And so we'll just call it number 2, the gray model. All right, so let's dig in a little bit further and let's see what the actual Elliott Wave pattern is that we may be looking at from this low that we saw in the summer. Okay, so, and actually this would look better on a smaller time frame chart. If you like what you see here, go ahead and press the subscribe button, hit the like button. That way you'll be alerted when new videos are produced. Okay, so here we are looking at a 4-hour chart, and one thing that stands out to me is we've got a completed 5-wave pattern higher. It's these circle waves, wave 1, 2, 3, triangle 4, and then 5. This makes up larger wave 1. This is actually called minor degree wave 1. And then from there, we've corrected lower in minor degree wave 2. From minor degree wave 2, we would be rallying in 5 waves. So minor degree wave 3 would have 5 waves associated with it. And once we get those 5 waves unpacked, then we can count minor degree wave 3 in place. Well, as of right now, I can find only one of those 5 waves in place. Maybe 2 of those waves are in place. And if that is the situation, then that means we still have much higher pricing to go within this black wave 3. And that would basically mean that Bitcoin would continue its rally to new all-time highs, and it would keep creating new all-time highs each and every day. And that eventually prices would come up here, find a high, retrace in smaller degree wave 4, and then move even higher to finish up this wave 3. Now this would just be a 3rd wave. We still need a 4th wave after that. So we're going to need a black wave 4. Whoops, not R, 4. And then we'll need a black wave 5. So as you can see by looking at this, this move to new all-time highs, or this recent move to new all-time highs, we're still early into this trend, and this could take us easily up into 6 figures. So 100,000, there'll be some wiggles along the way, but 100,000 would not be a problem under this model. And there might even be some higher levels out there as well. We'll get to that here towards the end of the video. But a lot of unfinished business to the upside. Now, when I zoom in on this chart a little bit further, is Bitcoin ready to take off at the moment? And when I take a look at this chart, and sometimes I'll roll things over to a line chart just to help clean up the waves a little bit and get rid of the wicks. So you remember when I come back here to the candle chart, sometimes you get these long wicks. These could be a bad feed that particular broker or dealer is using, that exchange. And so it's good to cross-reference this against several different exchanges. If I do that in this instance, then I'll lose all my labels. I've got all these labels attached to this chart, so that's why I keep it here. But another way that you can do it is by coming out and taking a look at a line chart. And it's very visible on this line chart that this is a three-wave move lower. Okay, 3 waves denote a correction, and so it's very clear that that is a corrective move lower. However, we've got a little bit of an issue here. It looks like we've got kind of a 3-wave move higher, and then we come back down here, and then now we really start to take off, and then it looks like we're doing some type of a correction, and maybe take off again later. So there's a couple of different ways to explain this. Maybe we've got another extended wave here, and this was wave 1 of the extension, wave 2 of the extension, 3 of the extension. So there could be a couple of different ways to explain it, and so it is possible that Bitcoin is in the process of rocketing higher, and it's not going to slow down. It's just going to keep moving higher. But there is one pattern on here that does have me concerned, and it is this guy right here. Okay, this guy right here, you'll notice as we come down and we hit this low, there is a very clear 3-wave rally up to this high. And the market trends 5 waves in the direction of the trend. So the fact that we would start a new rally with 3 waves would suggest that this is not a trending wave. This is actually a part of a larger corrective wave. So is it part of the corrective wave that started back here? you know, so you got like little 3 waves down, and then you'd have 3 waves up, and then you'd have another, another correction after that. You know, that's possible. This could be considered a large flat pattern, you know, where you have your rally, sideways correction, and then boom, you're taken off to the upside. Either way, they come to the same resolution. They come to the same resolution that the market is getting ready to rally hard to the upside. But this little 3-wave guy right here also introduces a little bit of doubt. A little bit of doubt that gives us a clue that, you know what, this whole rally from the low down here, starting right here, that this rally is a corrective wave. And if this rally is a corrective wave, then what we may be seeing is, you know, a 3-wave move higher, then a quick, swift correction lower that may come down into this box. And so in essence, instead of our wave 2, circle wave 2 is finishing right here, basically what this implies is we may get a quick correction here in the next few days, and it may drop it down into the 54 to 60,000 range, and that would be the end of wave 2. So either of these are small derivatives of the larger model that suggest Bitcoin is getting ready to rally and rally hard. It's just a question of whether it does it from the current levels or whether it rallies from slightly lower levels down here in this 54 to 60,000 range. But either way, current levels or 54 to 60,000, that's going to become a launching pad for much higher prices that will take Bitcoin up into the 100,000 region or larger. So that is the bull model. Now the bear model, I mentioned that earlier, how there is a model that suggests we, you know, this gray model right here, that this gray model suggests that we could be finding a high here in short order, and after that high, we could be selling off. So where might we be with that kind of a model? You know, and taking a look at this, I think what we may see are slightly higher pricing, that may take us up into the 72,000 range, and then from there find a more meaningful high that would start leading to a larger correction lower. But I don't think that model is higher probability at this point. And I say that because I don't see any wave relationships that hint to that being the case. And so we'll just have to unfold that model, cross that bridge when we get there. I just think it's lower probability at this point. I think the higher probability move for Bitcoin is that we are moving much higher from here. And, you know, maybe we get a quick dip in the next couple of days from the 54 to 60,000 range, and maybe it launches from there. But I think Bitcoin's getting ready to take off. Now, there is another chart that I wanted to share with you, and this really doesn't have much to do with Elliott Wave. Okay, and here we're taking a look at the all-time price history for Bitcoin. So I'm going to put this on a 2-day chart just so we can squeeze more of the price history in here. Now, I cannot take credit for this. I had seen this in a couple different places, but I thought it was so powerful that I wanted to make sure that I shared it with you. I'd first seen this probably 1 to 2 months ago, and thought it was interesting at that time. You know, 1 to 2 months ago, let's see, Bitcoin would have been trading, that would have been back in like September-ish. So Bitcoin would have been down here, well below the all-time high at that point. It would have been trading in the 40s or 50s. So anyway, taking a look here, you'll notice that we've got some very pronounced all-time highs. We get a dip and then another rally to new all-time highs. Well, there is a geometry and a symmetry that's been taking place with these highs. So we're using the Fibonacci retracement tool. Now, when you're using the Fibonacci retracement tool, what you want to do is you are measuring adjacent waves. So I'm starting right here with this peak, and I'm measuring with the Fibonacci retracement tool from the left peak down to the valley. And then what the output is going to do is it's going to measure the next wave higher. So it's an adjacent wave. We've got the wave lower comparing to this wave higher. And what I want to point out to you is if you take a look, the 1618 comes into play right near where this peak ended up occurring. So we had a 1618, a little bit of a correction, and then another rally that came up to the 227 high. Okay, so that is the pattern. The pattern is using the Fibonacci retracement tool from the recent all-time high to its adjacent low, and then we get a rally to the 1618, temporary correction, and then an ultimate high up near the 227 mark. Okay, so following that pattern, let's apply it to the next one. So we come out here, we measure out our high, we measure out our low, and then we see where this takes us up to. So you notice here's the 1618, we get a little bit of a correction, and then we rally up to a new high at the 227 mark. So the next high that ran into the December 2017 high followed this pattern pretty well. So where are we at now? Let's fast forward to today. So we had our fib. Our fib is going to take levels from this previous high down here to the low, and it's basically going to measure this run up. Well, the high that we saw in the summer of 2021 did take us up to that 1618 mark. And then we got a little bit of a correction, and then we're getting ready to rally higher. At least that's what this model would suggest. We're getting ready to rally higher. So where is that 227 mark on this type of a model? And what we're going to find out is that 227 mark is up here near 220,000. So when we take a look at the Bitcoin Elliott Wave models and how we could be rallying in that wave 3 of 3, yeah, I think we're going to make it up to 100,000. After that 100,000, we may see some corrections as some of those smaller degree corrective waves unfold. But I think a big top forms once we get up into that 200,000 range, maybe even 250,000 range. And it's from there when Bitcoin would be at risk of a significant rally, significant correction, a significant correction that could be in that 75 to 90% range. But up until then, 50% corrections are not out of the ordinary. What we saw in the summer was a 55% correction. So seeing some 30, 40, 50% corrections along the way, although they may be scary, if you're in at, let's say, 150,000 and it corrects to 75,000, that's a 50% correction. It hurts, but it would simply be a smaller correction within the larger uptrend. And I do think that there would be some additional higher prices in store here. So if you like what you see here, go ahead, give us a thumbs up, press the like, press the subscribe button. Feel free to leave us a comment. And that way you'll be alerted of future videos that we put out there. And I want to wish you all the best of luck in your trading. We will talk to you soon. Take care. Bye now.